So let's bring in Okpemi Oguntade, analyst with the Economic Research Unit at Financial Derivatives Company Limited now, as we focus more on oil and, of course, agri-commodities. Good morning to you, Okpemi. Thank you for coming in. So give us a sense of what the week has been like for crude oil prices.
Well, crude oil prices are coming back up, and this is because there's a general consensus that the U.S. crude inventories are coming down. The American Petroleum Institute released a report earlier this week stating that U.S. crude inventories from last week fell by 3.1 million barrels. But the main report we're tracking is the Energy Information Agency report, which is due to come out by later this evening. Okay. And so we're expecting that they would also agree with other analysts, and also in their reports would reveal that there was actually a drop in crude inventories from the previous week. So this has contributed to the upsurge in crude prices this week. Yeah,
but then you also know that another big story hovering around the U.S. is this is the U.S. Fed Reserve meeting, which starts today. A lot of traders are anticipating that this will also have an enormous effect on the markets.
Yes, a lot of traders are anticipating that they would increase interest rates, and obviously if they should do this, this would strengthen the dollar, and it would make dollar-denominated commodities more expensive for traders. So this would affect the commodities market. But if you're looking at other developed countries that actually increased their interest rates when they realized that their economy was coming back, for example, Israel increased its interest rates between 2008 to 2011 to 3.25%. But as at now, it has reduced it back to 0.1%. And this was because increasing interest rates wasn't actually sustainable at that period. Another example is Sweden. Sweden increased its interest rates because of the easy credit was overheating the housing market. So they felt they needed to increase the interest rates to bring down inflation, despite the fact that there was high unemployment. And once they increased their interest rate, this significantly created, an upsurge in unemployment. Unemployment rates went through the roof, and they had to, bring it back down. Presently, Sweden is actually, operating under a negative interest rate, so which means that when you deposit money in the bank, you have to pay the bank for keeping your money in the bank.
I wonder how that will work if you doing an environment like Nigeria.
Nah, I can't even imagine. There will probably be chaos and protests everywhere. You know, the Nigerian people, probably you have another Occupy Nigeria or something like that.
Hopefully we don't want such a thing to come up again.
But yeah, so when you look at the US fundamentals, I mean, their inflation rates are below target, and unemployment rates are like at the lowest since 2008. But the question is, if they should push up interest rates now, would it be sustainable? Because you have to make sure that this movement you're seeing in inflation and unemployment are actually going to remain that way. They're not going to, change. So for me, I feel like they should hold interest rates. And if they do hold interest rates, then this would lead to a short-term rally in the commodities market. But in the long term, things will stabilize back to normal.
Now you say commodities now, okay, for the oil at least.
For oil,
okay.
Yes, so things will go back to normal, and what would determine the movement in prices would be the supply and demand dynamics.
Because already there's talks that there's an oversupply in the market already, and so with that, news, investors still trying to digest that one and deal with it. They still have, to deal with other global concerns like the U.S. Fed rate hike and the rest of it. Let's talk about agri-commodities now.
Well, okay, so agri-commodities, presently for cocoa and sugar prices are coming down. And for cocoa, the reason why prices are coming down is because traders are trying to book profits ahead of the hike in interest rates. Because once interest rates go up, then you have a decrease in demand because it's more expensive for you to buy. So what you're doing is you're selling off their futures now to make sure they make profits before that decision comes in. So that's what's happening with cocoa prices. For sugar, traders are worried about the weakening Brazilian currency. That's the Brazilian real. And this is, once again, encouraging Brazilian producers to push out more sugar into the markets, an already oversupplied market, and this is, pushing down prices. And for grain prices, the U.S. weather is apparently, it's doing it's apparently very good, and this is, you know, helping with the harvest of these commodities, and obviously you're having an oversupply in the market, and this is pushing down prices. So for the agri commodities, prices are coming down, but on the energy side, prices are coming back up.
But then looking at the price of corn, for instance, it's still not looking, you know, too good. It's still in negative of 1.19%, selling at $3.86 a bushel.
Yes, this is because the market is oversupplied.
If you have an oversupply in corn.
You have an oversupply.
In other words, I should go back to my village, you know, and get a very nice, you know, piece of land and cultivate corn, and then begin to export it and have
you contribute to
a
the
barrel load of dollars. No, go ahead. Sorry.
So yeah, the corn market is still oversupplied because, you know, US is having an increase in harvest. Then if you go to Europe, in France, you also have an increase in harvest from the French economy. So all this put together, and they're pushing out corn over there. So that's, you know, contributing to the decline in prices for corn.
But then you'll be surprised because, you see, everybody wants to eat healthy these days, and eating corn is a very healthy way to go, whether you boil it, whether you roast it, or you turn it to, you dry it and grind it and make it a meal. And so you're wondering why you really have an oversupply. So maybe there's something we're not doing right for our own market.
The thing is, you're talking about demand for corn right now, but the demand for corn hasn't changed. It's, yes, everybody likes eating corn.
Yes,
but we haven't had, you know, some kind of crazy demand from nowhere, you know, going through the roofs. Demand is fairly stable, but your supply is going through the roof. So because of that, that's why prices are coming down.
What about for palm oil? You know, the other day when we were having this conversation, and a bosun says it seems as if he should begin to store palm oil just like you store crude oil, you know, because there seems to be, you know, more demand for it, but there's no ample supply.
Well, for palm oil, what you're having is the Malaysia and Indonesia, the two major producers of palm oil, and their currency has been depreciating against the dollar. So in like the same case you're having with Brazil, because of their currencies are depreciating against the dollar, they're taking advantage of this opportunity to push out supply into the market.
So it's also now an oversupply market.
Oversupply.
So we have so much supply, but we don't have enough demand. Why?
Because demand isn't something that changes with weather or changes with, you know, your currency per se. Demand remains fairly stable unless maybe there's an increase in income, and you can, even if there's an increase in income, your income and elasticity relative to these products income isn't sensitive to these products because they're not so much luxury goods, they're more like necessities. So even if your income should increase, you'd rather get a Louis Vuitton bag or Prada than go and get, you know, than go and buy more palm oil or corn. So what you have is, even if income is coming up, I mean, that would be the main reason why demand will go up anyways. Even if income is coming up, it wouldn't go towards these commodities. It will probably go towards more, you know, luxury goods.
Okay, so what are your expectations now for the rest of the week? And let me just quickly add, and I don't know if, you know, you can comment on this. With the situation we're having on the global crisis, on the global scene with regards this migrant crisis and the rest of it, and we're seeing a lot of migrants coming into Europe and all those other countries. How do you think it will affect food prices? Because, you know, one would expect that you've said that the markets are oversupplied.
Yes.
And with the crisis that they have, with the migrant crisis, you would have expected that somehow or the other there'll be a reduction in that supply, you know, oversupply that you mentioned.
Well, what you have with the migrant crisis is, what we need to consider is, even if that is going to have an effect in the commodities market, it's going to be a lagged impact. So even if it's happening now, and obviously you would expect an increase in demand to take care of this, you know, to take care of these refugees, you know, demand more food to take care of them. But even if we're going to have that, it's going to be a lagged impact. It isn't something that we would see in the market today. So even if that's going to have an effect, it will probably come down, like, say, 2 months down the line. That's when we would start seeing that. Because usually whenever you buy commodities, you buy them in futures. They are future contracts. So you buy them in futures and then you bring it into your, you know, your country.
Yeah. Thank you so much, Okwemi, for clearing that up for us. It's a pleasure having you on the program, as always.
Thank you.